Hello and welcome. Today we shall be taking a look at digital services and platforms provider Kainos PLC. The company has a market capital of £464 million and is currently ranked 45th in the UK FTSE Small Cap Index. In the financial year to March 2018, Kainos had a turnover of £96.7 million and an operating profit before tax of £14.25 million, which gave it a margin of 14.7%. It currently pays an annual dividend yield of 1.88%, which is paid semi-annually in October and December. This dividend is covered 1.4 times by the earnings per share. Kainos was founded as a joint venture between Fujitsu and the Queen's University of Belfast in Northern Ireland on the 14th of April 1986. On the 10th of July 2015, Kainos was floated on the main market of the London Stock Exchange. The current CEO, Brendan Mooney, joined Kainos in 1989 as a graduate software engineer and has been Chief Executive Officer of Kainos Group plc since 2001. Kainos has over 1,300 people across 11 offices in Europe and the USA, working interchangeably across its two divisions, services and platforms, to provide services to its customers across Europe, the Middle East, Africa and North America. The Digital Services Group represents 80% of revenue and comprises of digital transformation, the delivery of customized online digital solutions, Workday implementation, the provision of consulting, project management, integration and post-deployment services for Workday's software suite. The other group, Digital Platform, represented 19% of revenue and comprises of smart automated testing, Evolve electronic medical records, Evolve integrated care. There is revenue diversification across a series of sectors: commercial revenues £17.6 million, international revenues £12.8 million, healthcare revenues £11.0 million, software as a service and software related revenues £9.9 million. For the previous 4 years, Kainos has had a consistent revenue of between £60.8 and £96.7 million and an operating profit margin ranging from 14.7% to 19.5%, which gave it an average of 16.8%. The forecast for next year is a revenue of around £137 million and a margin of 15%. With generated earnings for the previous 4 years of between 8.9 pence and 10.7 pence per share, the dividend has always been covered since 2016 by at least 1.5 times the earnings per share. The earnings per share growth forecast for 2019 is 33%. The share price standard deviation for 2018 was 30, compared to 260 for the FTSE Small Cap. The current share price is 50% above the 52-week intraday low. In early July, Director Paul Gannon sold 400,000 shares in the company at an average price of 405 pence. Following this notification, Paul Gannon and his connected person have a reportable shareholding of 7.11% of the issued share capital of the company. In early September, Kainos announced a strong start to 2018 and that it expects its numbers for the year ending 31st of March 2019 to be ahead of market expectations. The market reacted positively to this update. At the start of November, there were 2 block admissions totalling almost 3.5 million ordinary shares issued and allotted to satisfy company employee share awards in relation to the company's long-term incentive plans and SAYE plan. The interim results at the end of November announced the 9th consecutive year of growth, with performance in line with upgraded market expectations and ongoing momentum. The revenue growth was 62%, adjusted pre-tax profit increased 42%, and sales orders up 42%. In early December, there was another application made for 148,500 new ordinary shares for the Share Incentive Plan scheme to all eligible UK-based employees. Full year results are due the end of May. KNOS continues to have a robust balance sheet with £28 million of cash, no debt and net assets of £35.7 million. The share price has fallen recently, but the potential growth is still reflected in the price-earnings ratio of 36.8 compared to the FTSE small cap average of 11.1. KNOS pays a dividend yield of 1.88 compared to the FTSE small cap average of 3.95%, which is covered 1.4 times by earnings. The historic track record is impressive and the company is operating in the lucrative public sector. There is a multi-billion-pound market for global tech businesses developing information technology solutions for businesses and organisations, particularly in the public, healthcare and financial services sectors. In the 26th of November interim results, KNOS announced that it had a contracted backlog growth of 29% to £125.6 million. This gives good visibility over future sales. For these reasons, I have given KNOS an overall rating of 3.8 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.